Imagine a company that controls almost every railway ticket booking in India. Every day, millions of Indians use this platform. It has almost zero competitors and it is backed by Government of India. Yet surprisingly, its stock has fallen nearly 25% in the last year and in the last 3 years it has barely moved. So, the real question is how can a monopoly business struggle in the stock market? The company we are talking about is Indian Railway Catering and Tourism Corporation, better known as IRCTC. This company operates the digital backbone of Indian Railways. Nearly 89% of all the reserved railway tickets in India are booked through IRCTC's platform. That means almost every online ticket in India goes through this company. And every day, more than 14 lakh tickets are booked on this platform. IRCTC is not just another travel company. It is a government backed digital monopoly. Barriers to entry on this segment is exclusive rights from Indian Railways, integration with national railway system, massive technology infrastructure and government regulation. In simple terms, a new startup cannot suddenly launch a railway ticketing app and compete with IRCTC. The most powerful segment of IRCTC is internet ticketing. This segment alone generates 401 crores in a single quarter. But the real shock is the margin. This business operates at 85% of EBITDA margin. Once the technology platform is built, every extra ticket booked becomes a pure profit here. The second business is railway catering. This segment generates 661 crores in revenue, growing 19% year on year. The launch of new premium trains like Vande Bharat is boosting the catering demand. The third segment is Rail Neer Water. The bottled water brand Rain Neer is also owned by IRCTC. The revenue is somewhere around 100 crores. The company is serving around 50 to 60% of its total demand, which means that they have a huge opportunity for a expansion. IRCTC also runs tourism business like luxury trains and also travel packages. Tourism revenue has grew 29% year on year. The services which are included here are luxury train packages, pilgrimage train, flight booking, and also hotel booking. Despite the falling stock price, the business is still growing. So here are the numbers. The revenue in last quarter was somewhere around 1449 crores with the profit of 394 crores. The revenue growth is almost around 18% and profit growth is somewhere around 15 to 16%, which creates the biggest mystery for investors. Why is the stock falling? Here are the three major reasons. The government risk. Since IRCTC is government controlled, any policy change can impact its profit. For example, if government change ticket convenience fee or if they bring a regulatory rules, investor worry about these kind of policy uncertainty from the government. The second limitation is the growth limitation. Since I already explained that IRCTC is dominating in ticket, when you already control almost entire market, growth naturally slows. So the company is trying to create new revenue streams, for example, advertising revenue, loyalty program, and travel services. The third part is the valuation correction. After its IPO, IRCTC stock traded at very high valuation. When expectations are very high, even a strong business performance may not move the stock much. And this is exactly what happened with IRCTC. So, this is not the end of a story. There are several new growth triggers which are emerging and which can really make a good thing for the IRCTC stock. The first one is Vande Bharat expansion. India plans to introduce almost 260 Vande Bharat trains. More trains means more passengers, more catering, and more ticketings. So, this will eventually increase the revenue of IRCTC again. The second trigger which management has put up is Unified Travel Platform. IRCTC plans to launch its unified travel portal. This could allow the users to book hotel, flights, tour packages all from the same platform, they have a huge data advantage, which can be a third trigger. Every day, millions of travelers uses IRCTC. This creates a massive travel database. If leveraged correctly, this could unlock advertising and cross-selling revenue extremely high. And this could be one of the game changer because data is the new oil. So the story of IRCTC is unique. On one side, it is a rare government backed monopoly business. On the other side, its growth depends heavily on the railway expansion and government policy, which means that this stock may not be a fast moving rocket, but it could still become a steady long term compounder. So, the real question for investors is simple. Is IRCTC just going through a temporary phase, or is a monopoly stock already fully priced in? If you enjoy deep stock analysis like this, subscribe to the channel because every week we break down one powerful Indian stock.